What is going on, everyone? Welcome to TradeZella's webinar. Let me just set everything up really quick. Let a few more people join. All right. So in this webinar, we are going to be talking about the power of journaling. I'm going to show you guys how journaling is very, important for traders, how to journal, and basically walk you through my process of basically becoming a profitable trader, right? So over the next 40 minutes, these are the three things we're going to talk about. We're going to talk about data collection for journaling and data collection for yourself. So all of this ties into one goal only. And that one goal is basically scaling your trading and becoming a profitable trader. And then we're going to talk about metrics that matter, and then finally scaling your trading. Now, there's two types of traders this is going to benefit for, right? We have trader number one, right? Just going to kind of draw out here. We have trader number one that is not profitable, that has not made money from the market and is trying to make money. And then we have trader number two that is somewhat profitable, has had green months, red months, and is trying to kind of identify their edge, identify what to do to get to the next stage of trading, basically scaling your trading. So if you are someone that has had success in the market and you are trying to get to the next level, this will apply for you. And if you're someone that's been having a hard time being profitable, this also applies to you, right? And if you guys stay till the end, I'll kind of go over some of my, two of my trading strategies, kind of break that down for you. And for anyone on here, we're not looking to sell you anything, not looking to up, purely educational, and just trying to show you how valuable journaling is overall, right? So with that being said, let's dive into it. Now, one thing I do want to bring up to everyone is I always tell traders this very, very important thing is you can't become a consistently profitable trader without any proper systems and processes, right? Trading is basically your business, right? If you want to succeed in your business, you want to make sure you have all of the metrics lined up. You want to make sure you have a good understanding about your business, right? And if one, it'll be very hard for you to be profitable. And two, even if you do become profitable, and I've seen traders become profitable, they are not able to maintain it, right? So it's very important. Like everything is very important. Now, for people that are new here, just a little background on me. I have been trading for 9 years. Have done very, very well for myself. If you do follow me on socials, have been posting my, logins for my broker accounts and so on. And the biggest thing for me that has been a big key takeaway in terms of growing as a trader is identifying my flaws, identifying what I need to work out, what I need to improve, and just kind of keeping a systematic process, right? So let's go over to point number one, which is data collection. Now, a lot of times when people start journaling their trades or they start looking at their data, the first thing I notice traders doing, which is wrong, right? Even a lot of companies and a lot of other people that journal kind of don't speak about this, but it's data collection. Data collection is the most important thing. Like it's the first step for you to get to a point of even being on path to being a profitable trader. You need to have proper data collection. Now you might say, Umar, what is data collection? Like, what are you talking about? So these are some of the things, in my opinion, that go into data collection, right? Markets you trade, your trade setups, your size, your process. So what does that mean, right? So think about it. Let's say we take two different traders. So I'm going to draw this out for you guys real quick. So let's say we have two different traders. We have trader A on the left side, okay? And then we have trader B, okay? Now, data collection is important because most of the time, and I'm pretty sure this is most people on here that trade, they'll start off doing the following. 1 week, their risk will be $300 a trade. 1 week, their risk on a trade will be $3,000. 1 week, their risk will be $5,000. Another week, their risk will be $50. Their size is very inconsistent, right? Second, let's just put S here for size. Second thing trader A does is one day he'll wake up randomly and say, everyone's trading GameStop, so I'm going to go trade GameStop. Another week, he'll wake up and say, today I'm thinking about trading options. Another week, he'll go and say, well, you know what? I'm thinking about trading Forex. I'm thinking about trading crypto, right? So his markets he or she's trading is all over the place. right? They don't have any real consistency in the markets that they're trading. Third, they don't have any real consistency in, I'm just going to put M here. They don't have real consistency in setups, right? So I always ask traders that, take on some trades, and I'm like, okay, like what are your primary setups that you like to trade? And they'll go, my setups? Well, it depends. I'm like, depends on what? They're like, depends on what I see. I'm like, okay. So when you go into that realm and you're like, hey, it depends on what I see, what are you most of the time looking at, right? And what I've noticed with most traders is most of the time their setups on what they're looking for has no consistency, right? Well, I traded Apple today because I was in a group chat and everyone else was trading Apple, so I traded it. Okay, great. The group chat maybe brought it to your attention, but what was the reason for your setup? Oh, I just wanted to make money. Okay. Long-term wise, not going to work. And if you do copy or pay attention to other traders trading, great. That's fine. Nothing wrong with that. But make sure you guys are actually understanding the process, understanding the setup, so you can make it a repeatable process. Most traders are all over the place with setups, what they're trading, how they're trading, what their processes are. Everything is a mess. Now, what happens with this essentially is when you put this into a journal, when you put this into anything to kind of perform or test, you are unable to find where the holes are, where the leakage is in your trading, what you need to work on, right? Now, trader B keeps his size consistent. And guys, I understand size will adjust depending on the confidence level of a trade, depending on, the trade setups, depending on how you feel. A lot of these things will adjust size. I get that. But until you are a profitable trader, until you have some consistency in the market, until you can identify what needs to be improved, you should not tailor with size. It should not be adjusted. Okay. So trader B keeps size consistent, right? Maybe $300 on one trade, maybe $250 risk on another trade, maybe, $320 on another, but it's very consistent within a range based on their account size, based on what they're willing to risk, and based on their targets. It's pretty consistent. Then their market approach. This trader might say, hey, my focus is to trade options, right? And I want to trade options on big caps. Now, they're not going to wake up one day and go trade penny stocks, another day go trade Forex, another day go trade crypto. They're going to be hyper-focused on that market and those instruments within that market to master them and understand them, right? This person stays consistent. And then their setups. Setups are very important. The setups they're trading, let's say you have an opening drive range. What is an opening drive range? What is the morning bounce? Right? What is the midday top reversal? What does that mean for you? Not someone else. I don't see, that's the thing with setups, right? You can call, I can call a setup ZYK. I don't know. I can call a setup ZYK. Okay. It doesn't matter. It doesn't need a special name. Now, my only thing is, what is the criteria of setup ZYK, which I'll talk about in a bit. Let me just clear this. I'll talk about in a bit, what setup examples and things like that. But you want to identify what that is. It doesn't matter what you call it. It doesn't matter what anyone else calls it. It just matters on how you are able to deliver those setups. Now, ultimately, what happens is when you have the proper data where you are very, very focused on a similar type of trading style with similar and consistent size and similar and consistent setups, you start seeing, well, if this is the pipe, right? You start getting an idea okay, well, there's some holes here and I'm getting leakage from here. This needs to be improved. There's some holes here and there's some leakage here. There's a hole here and there's a leakage there. That's where the proper data collection will help you. That's where taking the proper trades, that's the first step of improving your trades, taking the proper trades. Yeah, you might lose money, but the intent with the setup, with the market you're trading, with the size you're trading, if the intent there is consistent, right, that will allow you to identify your flaws. What I noticed with most traders, the reason they're not even able to ever get to stage 2 or 3, right? Because one day, like I said, they're trading Forex, then they're trading futures, then they randomly wake up and go, I'm going to go and I'm going to decide to, trade options today. They'll trade different markets. And then even besides trading different markets, they'll have a very inconsistent size. Like I've seen traders risk 300, risk 400, risk 300. And then one day they wake up and they're like, I'm going to take a big trade because I think it's going to work in my favor. They risk 4,000. And ultimately what happens is your risk has went up way too much, way too quick. One, it's very hard to maintain that from an emotional level. And then second, that one trade, your whole trading performance becomes contingent on that one trade, which is not proper trading, right? So data collection. So moving forward, if you guys are having a hard time looking at data and analyzing it and understanding it, let's all take a step back for anyone that this applies to, and take that step back and say, well, listen, what I need is I need to make sure that I am focused on all of these metrics. And then the process, we'll talk about the process in a bit. Just make sure that's consistent. And guys, when you do something consistent for a long period of time, let's just say, let's make long time 4 weeks, right? And that's not what I'm aiming for. I'm aiming to be consistent for 3-4 months, right? But if you're consistent for 4 weeks, same market, same setup, same everything, once again, you start identifying the problems, and that is a step towards being profitable. That is a step towards actually being good at trading, right? And I'll talk about this deeper in another video, but just a little bit on a side note, when you guys are starting out, and even if for the people that are on here and that haven't started recently but have been trading for a while, stop focusing on one metric, which is money, and stop letting money dictate if your trading is good or not. Right. And I want to cover this topic too in another video. I'm going to go very in depth because I think it's very, very important. A lot of traders, a lot of people that start trading, their only metric is, well, I didn't make money, so I'm not trading. I'm not trading well. No, if you're starting out and you're able to achieve metric number one, where you are able to get good data collection, guess what? That is a step towards profitability. Then let's say step two, you are able to identify your flaws. You are already ahead of 60-70% of the game. You getting to a point of just identifying what the problem is and knowing what the problem is, even if you're not profitable, I promise you, you are ahead of 60-70% of people that are in the market. You may not be profitable, but you are ahead of the game. So you need to also know what those metrics are to keep yourself going. Like you can't say, oh, well, it's 2 months, I haven't made $1 yet. Yeah, well, in 2 months, you maybe identified your problems and now you know what to work on. Now you have a clearer roadmap of getting to the endpoint that you need to get to. Right? So that's the data collection part. That's very, very important. Now, after data collection, after you have the proper data collection set, what are some metrics we as traders need to focus on? And, at the end, I am going to walk you through some setups and things on TradeZella that I use that I think are very important to identify things, to identify what you need to work on, what you don't need to work on. And we'll dive into that in a bit. But before that, I just want to give you guys some information. And then at the end, we'll start breaking that information down. All right. So far, is everyone good? All right. Getting a solid response. Perfect. So now next, metrics that matter. We're going to go into metrics that matter. Some metrics people pay attention to, some metrics people don't pay attention to. So there's three. So when you're trading, there's 3 stages you're at, right? And I think paying attention to each trade is very, very valuable. So the first stage is the game plan stage, pre-market stage, before you take on a trade, before you start your trading day, be it you trade futures, be it you trade stocks, options, Forex, crypto, whatever. You have the game plan stage. Then you have the execution stage, right? The execution stage, and then you have the post-trade page, right? Or stage. Every single one of these stages are important. I will not say this one is more important than that one is more important than this one. They're all equally important. Now, yes, execution is the most important thing, but if you're unable to build good game plans, get a good understanding of the market, you won't be able to execute well. Well, let's just say you are able to execute well and you don't know how to analyze your execution, analyze what you need to improve on, what you're doing good, what you're doing wrong. You won't ever scale your trading. So all 3 go hand in hand, right? So what I've seen, in my trading experience with myself and other traders that I have, worked with closely or seen their progress and so on, is sometimes there's traders that are great at this, suck at this, and great at this. Most of the times, most traders don't get all 3 right. Most of the time, traders typically have 2 out of the 3, right? The one that, majority of traders lack the most is this one. This is like if I had to pick one that majority of traders have a hard time with is execution, right? These two people kind of are okay with, and this is what they suck in. And then there's people that I know can execute very well. They can identify things, or they can build great game plans. Then I know people that can build great game plans, can execute, can kind of break things down, right? So it depends what stage you're in and how each stage kind of correlates. So let's go through each stage. Let's go through each stage really quick. So stage number one, game plan. Okay, what is the game plan stage? So the game plan stage ultimately is where you are basically building your kind of day out, right? They are building out things such as your pre-market game plan, your market research, your process to identify what you think of the market, what you think of, the game plan, what you think about the overall market. What are you watching? Why are you watching what you're watching? So I'm going to give you guys some examples that I see, some traders do, and I'm not really a fan of, right? That I just doesn't make sense to me, right? And if you do this, it's one of those things where you have to, like, as a trader, you have to really think about it, because when you think about it, you'll realize, like, wow, this actually doesn't make sense. So when you're making a game plan, right? So for me personally, when I build a game plan, it starts off with the overall market. I like to look at the overall market, right? How is the overall market responding? What is the overall market doing? What has it been doing? And then I go into economic events to understand market, right? So we have the overall market in terms of charts, and then we have something that's off charts. We look at it from a fundamental point, right? We have overall markets from a technical point, and then we have everything from a fundamental point, right? Because, hey, the market gapped down today, picked up a little bit. Why? What's been happening yesterday till now? We had the FOMC meeting. Obviously, that plays a big role. FOMC meeting, around that time, things do get a little bit crazy because there's a lot of money being moved around. As money's being moved around, we are anticipating moves. Harder to gauge where the market's going to go, but I understand the bigger economic picture that is happening. I don't need to understand it fully detailedly just yet, but I do need to know this is a market moving event. This will and can cause the market to make some big extreme moves. And as we've seen yesterday and today and in the past, it does, right? So I like to get a gauge of that and like to be in tune with the market, right? Then when I go into the day, depending on my trading style, see, now this is why this is important. Now, there's two types of traders. We have a trader that may say, I'm only going to trade the market. I'm only trading futures. I'm looking at ES. I'm looking at SPY. I'm looking at QQQ. That's the only thing I'm trading. Then you may have traders that say, well, I am a news or event-driven trader. I like to look at news. I like to look at catalysts from Apple, from Amazon, from Tesla, and I like to look at what are moving pieces that I can actually take advantage of, right? So you need to understand which one you are, right? That's what I was saying earlier, where it's very important to have the right data collection. So let's say we go in my situation, and let's say right now I've been just heavily trading SPY, right? Just trading SPY. I'm trading SPY options. So that my main focus is creating levels and areas to trade SPY and Y. Basically, I need to have a Y. Now, this is something traders do, not a fan of, because I don't like to say, well, don't ever do this, right? Because there's things I may say don't ever do that may work for some people. And, if it works for you, great. I'm just not a fan of it. It doesn't make sense to me at all. And I don't do it. So I'll see a lot of traders on Twitter, on Instagram, or communities. They might say, hey, if Tesla gets, or they might say like this, let me flip it, right? Calls if Tesla gets to 300, right? For me personally, that doesn't work when I create a game plan. So for me, before I go into the day, I need to have a solid understanding of ways the market can kind of unfold, right? So I think when I mentally look at it, calls if Tesla gets to 300, it doesn't allow me to factor in if obviously the area is strong or not, if that zone is a zone that we're seeing strength, or if we're getting to 300 with strength, right? Now, for some people, like I said, and it's not to say it in a bad way, it works for some people because there's people that'll say that and they understand what the tricks or tips or ideas are to trade Tesla if or when it gets 300. Now, most people, they'll see 300, right? They'll see Tesla get there and they're like, okay, time to buy. Okay. Now, the way I look at it that has helped me is I'm more of a fan of creating levels, right? And creating if and then scenarios, right? So I'll give you an example. 300. So I'll say Tesla, right? 300 is a strong inflection point. If we have strength into the 300 level, look for a trade. Now, what I essentially do, and once again, this is what works for me, right? The reason this makes sense to me and the reason this allows me to be more flexible is because when I write out something like that in my pre-market notes or pre-market game plan, I start allowing myself to have flexibility, right? I don't become biased. Right now, when Tesla gets to 300, immediately I'm biased because I'm going to buy calls, or I'm looking to go long, or whatever the case is, or I'm looking to short, whatever game plan I have. So I become very biased. And once again, something I've learned about myself, which is why that process doesn't really make sense to me, right? So I'll go long and I'll say, all right, time for me to go long here, time for me to, buy calls, opposed to, well, this is a 300 level, right? There's a strong inflection point. If we have strength into 300, look for a trade. So I want to identify that. I want to understand that. So once we do get to 300, now a lot of questions come in here. And that question number one, how did we get from, let's say, 297 to 300? Like, how did that happen? The how matters, right? A lot of traders don't focus on this, just going a little bit off tangent. A lot of traders don't focus on the how. How do we get from 297 to 300? A chart's very different when it goes from this level to that level like this. That is one way a trade moves. And then it's very different when it goes like that. These are two different ways. Now, in both ways, it got from 297 to 300. But my question is how? How did it get there? Did it get there fluidly? Was there excess liquidity, activity, movement towards 300? Or was it like a hard chop into 300? Because if it's a hard chop in 300, my saying is, you're not going to see a stock go from chop into direction right away. And if it is, I don't want to be the first. I don't want to try to predict the first direction. I want to try to get into the second leg and have a higher confidence move, going with size, make my money and walk out, than to start just throwing money at stupid trades, in my opinion, right? So my first thing is how, right? So that's why when I kind of lay it out in this way, I start having the how, right? And then I start also factoring in everything else with the overall market. Like, hey, if let's say Tesla does go from 297 to 300, let's say it went from 297 to 300 yesterday, and I'm just making up levels right now, and we have the FOMC coming out in 2 hours, I don't care if it's going to 300. The FOMC comes out in 2 hours or 3 hours, things can flip, right? Well, if we have economic event coming out, things can flip. Maybe it was this move to 300 was strong, but not strong enough where our vol wasn't high. We had weak moves, weak volume. Now, this may be a good shorting opportunity. So it gives me that openness to look at the trade from different perspectives, and all of these tie in. Now, taking a step back and going back to what the journaling part of it, the game plan is important because now you start knowing what your deficiencies are. Oh, wow, I didn't even realize that there was the FOMC meeting today. I didn't even realize that Powell was speaking today. I didn't even realize that we had this economic event that happened yesterday driving the market today. Oh, I need to get better at this. I need to be more aware. Okay, how do I get more aware? What do I do? How do I make sure that this stays streamlined, right? And this gets better. Now you guys see where those small kind of, I guess, milestones are kicking in, where you start getting better in different areas of trading that don't result into your P&L overnight. But over a few weeks, your P&L still may not be resulted into it. Your trading levels start improving. You start becoming better at assessing things, right? And that's what we want to focus on. We want to become better traders, right? And ultimately, if you guys become better traders, right, ultimately you will make more money. It's very simple. Be a better trader, you make money. But now if you go and try to make more money, you don't become a better trader by trying to make more money. You know what I mean? So that's the first component, right? The game plan component, you want to make sure it's streamlined. You want to make sure You have a process to go identify what's going on with the market. You start journaling that part. So here, I'll show you something in TradeZella really quick, right? Let's just go right here. Boom, boom. So if you guys do go on TradeZella, one thing you guys can do, which I think is very valuable, before you start the day, let's say tomorrow, before I start the day on the 4th, you can go and you can create your own, I guess, template. So if you go to Daily Journal, you right click, you hit edit template, you can create a template and save it. Once you save a template, what'll happen is that template gets carried over to the next day or for that day. So one good thing is for the day, just write out your notes for the market, or write out your thought processes on levels and what you're looking to trade, and then come back to it at the end of the day. And I'll talk about that too in a second, right? Because now when you do that for months and months and months and months to come, what starts happening, right, is this part of your trading, just the game plan part itself improves, right? You start having a good understanding of what moves the market, how the market moves, right? What are economic events that move the market? Oh, on the first, like tomorrow, Friday, first Friday of every month, we get job reports. Market is paying attention to job reports. How do I remember that on top of my head, even though it's not something crazy to remember? By focusing on these things, by doing it with intent, right? That hour or two I do spend looking at the markets and looking at what I'm trading, I do it with full focus and full intent, and then I go back to it. And that's how you create good learning habits. Because learning itself, guys, another off-topic thing, learning itself is a skill set. The better you are at learning anything, the more and more fluid you'll be in terms of getting to the end goal. And one thing that's helped me learn almost anything, even offside to trading, is note-taking. You know, having a process. Okay, if I want to learn this, these are things I want to learn. This is how I'm going to go back to it. So in trading, when you write down your game plan and you go back to it at the end of the day, you're like, oh man, I missed that one. Makes sense why the market was a little bit iffy today, because we have job reports coming out. Job reports will give us more guidance into next week. Today, you have bulls and bears fighting, not getting the direction. Why? Why doesn't this happen after all the FOMC meetings? Oh, because tomorrow job reports come out. Why job reports important? Oh, I see why they're important. I see why they're moving the market. See, the very important part. Now, as you're building this is a continuous thing. This is something that you build over and over. You go into execution. Second thing that is also very important. Now, what do you focus on execution, right? In execution, you have, you know, your basic stuff such as your trade entry, exit, right? What was your trade setup? What is your risk? What's your market read, trade read, whatever you're trading? What are you reading about that? What's your understanding of that? These go into execution, right? So every time a trader takes on a trade, I first ask them, okay, before you go into execution, show me a game plan, right? Does your game plan correlate into this trade, right? Now, let me take a step back before some people go, wait, hold on. Now, if you have been trading for some time and you are profitable and you are looking to trade Tesla and you don't have SPY on your watch list and you end up trading SPY, it is okay because you have justified it. You have reached the point of profitability. If you're not profitable, if you're not consistent, don't randomly go and pick trades that you did not look at before the market, because switching from trade to trade or stock to stock or instrument to instrument is a very difficult task. Going long, then going short then long, very difficult to do in the early stages. Don't make things harder for yourself when you are starting out as a trader. Just doesn't make sense. Do the simple things, get good at the simple things, identify what works for you in the simple things, what doesn't, improve it, build up confidence, build up capital. Now you start taking things that are more challenging. You get to pick, guys, what challenging things you want to do and when you want to do it. I just never understood why traders make their life so hard in the initial stages, right? So once again, create the game plan. I'm looking to trade SPY. This is what I'm looking for. This is what I'm looking for. This is what I want to see. What you're looking for may not even exist. So go and improve what you're looking for, right? Before you even get to this. And then once you do get to execution, are you following through with your game plan to your execution? Now, in your game plan and execution, what are you looking at? Trade, entry, and exit. Where are you buying? Why are you buying? They're like, what was your trade setup, right? Why did you take that trade? So one thing I always recommend every single trader to do, and I'm just going to share this really quick. So I always tell traders, whenever you guys take a trade, any trade you guys take at all, one thing I highly, highly, highly recommend is always tag your trades. Like always tag your trades, give your trade a setup, give it something where you're like, okay, this is the setup that I have. This is what I'm taking this trade. So for example, we come here, right? We want to understand, okay, we took this trade. What was the setup on every trade? What was the mistake? What did we do on this trade that, could have been better, could have been worse, and so on. So if I go to this trade, hey, what was the trade here? Continuation sell-off. It didn't work. Okay. I go back to it. I realize, why didn't it work? What did I do wrong? Right? We got the first continuation sell-off. I thought we're going to see a continuation here going off a heavy, heavy sell-off. Obviously, we're in midday after seeing an extended sell-off. I wasn't able to recognize that in the meantime. So messed up, got burned a little bit, and that's it. Right? Then there's other trades, right? You'll hit other trades. Let me go to another trade really quick. You'll have a few other trades where you're like, okay, this worked. Blowing top. What happens? We get a weak open. We get a flush right off the open. We push, weak right there at 377, right there, looking for a short, enter, exit, exit. Exit it way early, right? So if I go, early exit, right? So sold early, there you go. I made a mistake. I sold early. I panicked, sold a little bit early on this. It's okay, but that was a trade. Right? I have a setup. What was my setup? Get a weak open, 377.50s weren't able to hold. Once I saw weakness consolidation there, went in for a short 195 contracts, tried to get 300, didn't get filled. And then right on the leg down, scaled out, scaled out. Keep it consistent. So that's why having the trade set up and why you're taking some trades, what is causing you to put this trade on? What is causing you to put this position on? Very, very important, right? Now, this setup thing is, if you don't have setups right now, go back and learn setups. Like if anyone on here says, I don't have a setup, then like my question is, why are you trading? What are you trading? Right? It's so important to like, what are you trading? And then the psychological part there is they'll say, I'm trading to make money. Well, how are you going to make money if you don't have a clear identification of setups? And even if you do make money with no setup, when you go take a trade tomorrow, next week, you're going to give that money plus more back. So you need to have setups. You need to understand setups. You need to be able to read setups. You need to be able to practice them. Even if you go trade one contract, even if you go trade one share, even if you minimize your size, which is what I recommend traders to do, minimize size as much as possible and trade and figure and learn the setups out. Have an identification. I'll show you one and I'll give you a rundown and take it from there, right? Now, your risk, right? What was your risk in that trade, right? Risk is very important, making sure your risk stays consistent, making sure you are, keeping that aspect of your trading super, super consistent. You're not increasing or decreasing risk, right? So I had a week where I took on some trades, and let me see what it was, right? I think it was it September? I think it was maybe September. Yeah. Okay. So here, look at this, right? I'll show you guys a week, 13 to 15th, right? So let's go on that really quick. I'll show you guys something really, really interesting. So we go to September 12 to, let's say, 17. Okay. In this whole week, right? When we go here, very interesting stuff about this, right? So when we go in this week, guys, very good week. Okay. But now, like I told you guys before, I am looking at a lot of my trades in terms of, I'm looking at it from a performance aspect of what did I do wrong? What did I do right? What could I have done better? And things like that. I think it was maybe this week, actually. I think it is this week. Yeah, it was a different week. Sorry. So here you go. It's a week of the 21st. So I'll show you how risk plays a big role, just to show you a real example of it. So you guys get a great grasp of it, right? So this is a week. Had 4 trading days, made about 75 grand. I think I recapped this too, if you guys saw. So when you look at this week, face value wise, you're like, wow, you did great. You made 75 grand, took 7 trades, average winning, average losing trade. So a few things. Obviously, my average losing trade is very, very high compared to my average winning trade. But these are things that don't matter. The things that really, really matter. Let's go into that, right? Now, you may have weeks where you make a good amount of money. You're like, oh, I made 75 grand this week. Now, I look at every trade based on the trade, if it's good or not. I don't gauge a good week, a good month, a good trade by the end result. So A green month does not mean I traded great. A red month does not mean I traded bad. Same goes into my individual trades. A red day doesn't mean I traded bad. The market didn't give me anything. I was able to identify that. Maybe I stepped out early. Maybe I stepped out a little bit later. How did I adjust my risk, right? Maybe I did find good opportunities, just didn't execute them well. Maybe the opportunities just did not work. I don't know. But when we go into this week, right, this is what I want to break down. So we're going to organize some things here really, really quick. Now, if you see something, see, I put no setup. And this is me being honest about these trades. I had a trade. This was FOMC day. I made 56 grand, 80%. And I will openly say this to you guys. I got lucky on that trade. I did. I directly got lucky. There was no real setup. I took the trade and I was like, oh, man. And then I took another trade and I got burned, right? Obviously, walked out the week great. But that one trade is very, very important because that one trade is a trade that is like my whole trading was contingent on that trade, right? So here, I'm going to walk you through this week really quick. We're going to start from the bottom, right? So here's approximately the risk I'm making, the assumption that I'm putting on, right? With my stop loss and so on. But this is my initial risk. So let's start off with the beginning of the week. First trade made 11 grand. Look at my risk, 5K. My second trade, I didn't fully get filled. This was kind of a filling thing, but whatever, right? Inconsistent size. My third or fourth trade, look at my size, negative $26,000. And realistically, with the way the premiums were moving at that exact time, this was probably even more, right? Now, this was the first trade after FOMC on September 21st. I put on about 26, maybe 30 grand of risk on a single trade. Now, one could argue and say, well, maybe you had high conviction. I'm telling you, I didn't have high conviction on this trade. This trade could have went either way, right? This wasn't in a high quality or a high setup, which is why I didn't want to label it with like, this is a setup. Yeah, I knew what I was looking for. Ideally, I didn't close my eyes and take the trade. But going back to it, it wasn't ideal in terms of size and in terms of setup. So when I go into this, and let's just say this one trade, I took 1, 2, 3, 4, 5, 6, 7 trades, right? Now, imagine this one trade didn't work out. So, like, just think about that for a second, right? And this is what happens to a lot of people. And I'm pretty sure if you guys go into your data and you look at this, you'll be amazed. You'll have one day out of a week and you're like, wow, I traded so well 4 days. And that one day, I gave all my profits back. Or I traded so well for 3 weeks and in 1 day or 2 days, I destroyed my whole month, right? When we look at this, right, think about it, 11K, 600, let's say that's 12K, 2K. These three profits equate to about 14K, right? This trade right here is 7K, then 16K, right? So if you take just these two profits or some of these profits that I do have listed here, right? This goes into 21K, and then you do another 16, you are at 27, 38, about 37, 38K. Make it 38K. So $38,000 is basically my potential profit, right? This one trade alongside with this trade has the potential to wipe everything out. Why? Because my risk drastically increased, not a little bit, drastically, right? So you don't want to put yourself in predicaments where your whole trading is contingent on one trade or one day. And then this week, my whole week, a 75K week, more than 60, 70% of the profits were made from one day or one trade, right? That's not good trading. That, if you don't recognize early on, you will not be able to come back from. If you don't recognize early on, you will make the mistake and you will get caught up in something sooner or later. So that's why when you are executing, right, you need to actually go and identify what is happening in terms of your risk. You need to keep that consistent so you are able to stay alive. You aren't getting wiped out because of one single trade, or single trade isn't making your whole month. Like, you shouldn't have that. Now, obviously, if you're at a more experienced level, a consistent level, I understand, makes sense. But at early stages, no. Consistency, keeping everything consistent and keeping going from there, right? Now, going to the final stage, which is post-trade. Now, what should you do post-trade? This is when you have all your trading metrics done. This is when you have your pre-market game. This is where you've taken your trades. This is where you have everything in front of you. Now, what I like to do, like I said, First, I like to look at my game plan versus actual trading for the day, for the week, just overall. Hey, this week I'm not going to be, risk on. Like this was a prime example. I did not want to be risk on this week. I have no trades this week. I'll look to trade tomorrow, probably, depending on, the job numbers and how the open happens. But besides that, no trades this week, right? How was your game plan to your actual trading? Did you have a game plan? What in your game plan worked? What didn't work? What could you improve? Post-trade recap. Trade setups. What are the trade setups I've taken this week? How did the trade setups work? Did they meet my entry criteria? Did they not meet my entry criteria? What was my exit criteria? Giving you an idea of exit criteria, I'll talk about in a bit. And what on that can I improve? My risk parameters. How was my risk today? Where did I mess up? Did I go on a tilt today? Right? If I go in some of my trades, right? There are days where I went in complete tilt, right? Not even this day. I know it was a day, I think, in August. I was traveling, wanted to trade, yada, 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 went on two back-to-back. July 29th went, right? You just look at this day. It's absurd, right? Happens to everyone, but not acceptable. But going super small in shares. Wanted to stay shares just because I was trying to build a little bit consistency and a little bit flow. I was traveling at this time. I remember this day very confidently. When I shorted Amazon with shares, I was, wow, like, why am I even doing this? Let me just hammer a good position. Go in, try to hammer, test the puts, get crushed, get some 2 trades in, build my confidence up. So you have to understand your confidence meter, right? Even though it doesn't relate equally to your profits, your confidence meter works like this. If it's at 0, I make $300, boom. If I make $10,000, boom, it's the same thing, right? Now, my confidence meter obviously will show me like, hey, you're super confident. You should keep going. You should keep, taking trades. And then what happens is my size, if I go with size increases. So immediately when my confidence is here, I need to be able to, as a good trader, bring my confidence back to 0 and not be biased. I kept it up here, took a second trade, got burned, build my confidence back up, got burned, 10 grand, right? Where after these 2 trades, 10 a.m., I could have said, you know what, let me slow it down. Let me not put these trades on. Let me be done. I maybe walked out the day 3,700, maybe walked out the day 4K, 5K, double the day, 10K down, right? And once again, I know what people say, well, you've had days bigger than that. Guys, I don't care. It doesn't matter. They're like, if I have a $2,000 day where I traded bad, it's equally, obviously putting numbers aside, it's the same thing as having, to me, a 20K day where I traded well. I knew my risk on the 20K day. I knew what I was getting myself into. I knew what I was putting out. And that's where you got to gauge as a good or bad trader, right? Then we come Monday, obviously, this carried over. I will, remake the money back. I'll be good. Start the day off going into Monday. Super aggressive, -2-hour trade, 26%, 12%, 38%, 15%, 15%. Make a little bit of money. Okay, I think I got it. 10 a.m. market's going to shift 10%, 7%, 4%. And just to bleed out. Legit just to bleed out. Right? So there are days that does happen. But when you go into that post-trade analysis, when you do go into that post-week analysis or month analysis, you start identifying these things about you. You start identifying, ways that your mental is being messed up and your technical. Hey, like those 2 days were not these days were not me. Like this trade, look at this NVIDIA trade, guys, I took right on the open. The market open, 8 seconds in, I'm going to short NVIDIA. I already came back from that weekend. I already had in my mind, I'm going to make my money back. And NVIDIA, if you guys remember that day, it's, I think, after earnings or something. Look at that. I shorted right on the open. Bounced to 180, went from a low of 173. So you can imagine how option premiums fluctuated in this was a 2-minute trade. So in 2 minutes, boom, 26% gone. Right? So you need to recap that mental aspect of, hey, did I have a setup there? What was my setup? No, I didn't have a setup. I just try to hammer short on the open. Why? See, the whys are important. Because I wanted to make money. That was it. So they all lead into metrics that matter. And I'm not talking about metrics that we'll go into some of those, like winning percentage, average winning, average losing. Those are all cool. Those are all phenomenal stuff to pay attention to. And they'll give you, your trading, how your trading is going from a number perspective, right? Hey, if I do go into, let's just say, let's just say I go into my October, hypothetically, right? What is my average win, average losing? Now I don't have crazy amounts of trades the past month or so. Okay, my average winning is a lot higher than my average losing. I'm able to handle losses well, but also I don't really have that many losses to compare it to right now, right? When you do have a number of losses, it becomes a lot easier to see how you deal with losses. Like if you had one loss, great, you had one loss, but you can't really gauge how you're going to handle that, right? So now these three metrics, once again, have to be in line, have to improve, have to be able to improve your game plans, have to be able to read the game plans well, have to be able to read the game plans and execute them well, and also have to be able to identify your trading problems from a mental and a technical point of view. And it is your job to kind of identify that and take it to the next stage. Now, going to the last two stages, and like I said, we have about 10 more minutes, scaling your trading or improving your trading. Now, scaling your trading, I always tell people, if you are at a stage of scale or if you're at a stage of inconsistency, two things I highly recommend, right? Simplify trading as much as you possibly can, right? Trading is complicated, yes, yet it's not complicated. I know it sounds weird, but just hear me out on that. So if you focus on one market, you focus on 2 to 3 setups, you eliminate any and every trade that does not align with your trading plans, right? It automatically clears up so much noise. I always say when something is complicated or things get very rough in terms of organization or management or whatever the case is, this is how things look. Instead of adding, just start removing things. Like, okay, I don't need 5 screens right now. I can barely focus on one. Like, think about it. If you can barely read price action, what are you going to read on 4? Doesn't make sense, right? If you can barely do it on 1, what are you going to do on 2, right? So at that point, start scaling back. You don't need 4 screens when you can't read the market or understand your patterns, your behaviors, your execution, is flawed. You can't read the market. Like, more screens won't improve. If you're having the best internet connection, won't improve, won't do anything. It goes into you. So simplify, cut out all the extra noise. I see people getting that small box that you click to execute on. I'm like, if you can't execute well on a keyboard, what do you think that's going to do? That's there to increase something that's already working, and you enhance. When something is not working and you throw more things at it without building the foundation, it will not improve. It will just create more and more and more problems, right? So simplify your trading, focus on 2 3 setups. What are your 2 3 setups? Identify 2 3 setups, identify what trading style you have, what trading style you like. Some traders cannot scalp, right? I know some traders want to scalp, be in and out of trade. Some people don't have that. Some people are great at scalping, but they can't hold trades for 10, 20 minutes because they're impatient. So identify your natural way of being, what you are good at. Some people are very good on their feet, meaning they're very quick on able to identify opportunities, be able to execute on them, be able to have a good control or grip on their thoughts and emotions. For most people, they're a mess when that comes to that realistically. So if you are, identify what side you're on, identify what trading style you want to take, identify the setups in that realm, and take it from there, right? And then when you kind of build consistency, you do the following. Like I said, focus on less setups, identify those setups, and I'll go over a setup in a bit. Eliminate any and every trade that does not align with your trading plans. Track the following metrics and keep them consistent. Last metric I really want to talk about is R multiple. I'll talk about that in a bit too. You want to make sure your size is consistent. You understand your size. You want to make sure your R multiple, meaning your risk, is consistent. You want to make sure your setups, you know what setups you are trading and how the market presents them and how you will take advantage of them when they are presented. Your plan building needs to be top notch, right? You need to be able to get a good understanding of the market. Like seeing the up and down movement today, I don't want to say, oh, I predicted it, but I've kind of had a feeling we're going to get that today. Why? Because you're getting bulls and bears on both sides, fighting between the news that's possibly coming out tomorrow. One's going to be bullish, one's going to be bearish, because one's going to identify what the Fed said tomorrow and how they're planning to move on. One's going to identify the job reports tomorrow and take it in a different way. So there's going to be a clash between them, and that's realistically what kind of happened today. And then obviously your execution. How well can you execute? Okay, great. You can identify market movements. You can identify what a stock will do, what your financial instrument will do, where it will potentially go. Great. You can call stuff out. Woohoo, great. But call outs don't get you paid. Execution does, right? You being able to execute on those call outs. So how well can you execute? Like I see people on Twitter all the time. So I call that out. Okay. I'm like, cool. Great. If you didn't trade it, doesn't matter. I can sit here and say I call this out a million times, and mentally, we call stuff out, but it does not do anything. Execute, improve execution. Obviously, if you can quote unquote call stuff out and be good at it, reading up market opportunities, phenomenal. If you cannot execute, it does nothing. Now, in terms of setup, right? For people that joined late, yes, this will be recorded and this will be sent out. So yeah, this whole thing is recorded, right? So setup example, right? So here are some of the setup examples. So this is what I identify as a setup example. So this is an opening drive play. This is a setup I use. So what do I look for this, right? My entry trigger. I need strong market. SPY needs to be in my favor. What does SPY in my favor mean? Obviously, if I'm looking for an opening drive play towards the upside, I need to make sure that we're seeing strength in SPY. We're seeing strength in the overall market on the open. Maybe we're not looking for maybe there's not some big news coming out at 10 a.m. that the market may be waiting on and stay flat on. RVOL for the stock or for the market needs to be at 1.5, meaning relative volume needs to be strong. And at times, strong tape, if I'm looking at a stock that I can read the tape on SPY, good luck trying to read the tape, won't happen. Level 2, like it's just not going to happen in SPY, right? But on some stocks, at times, it does become readable, in my opinion, like Amazon before their split was a little bit easier, right? What are my exit triggers? What causes me to exit? Heavy selling on tape, if I can read the tape, right? Market is reversing, meaning I'm not seeing strength in SPY anymore. And that can happen, guys. Sometimes you can say, I think this is going to go up and I think this is a good buying opportunity. And the moment you get in, you're like, wait, never mind. It's not a good buying opportunity. Cool. Get out. It's fine. There's nothing wrong with that. Don't get burned, right? Volume starts slowing down. I start seeing a decrease in volume, meaning RVOL goes down. I don't see the aggressiveness anymore. I'll get out. There's times, right? I can take you to some charts. There's times where a stock dumps. I got in here, I got out there, and then the stock ends up being here, and I miss out on like a big day. Realistically, sometimes, not every time, sometimes I panic. Happens to everyone. I'm like, oh, I'm up 20 grand. Let me take it and go. Not the right way, but we make mistakes, right? And sometimes something here starts adjusting where I'm unsure. And when I'm unsure, I'll show you this much right now. I'd rather be on the sideline than be in the mess. Right? It will keep me in the game a lot longer. And as a trader, my main thing is I want to be alive as long as I can as a trader. I don't want the market to retire me. I want to retire from the markets when I decide to, or if I decide to walk away. That's been my mentality from day one, that I will not let the market keep blowing my accounts and destroying my accounts. I will take full responsibility and control over myself to the full capacity that I can and take it from there. Right? So yeah, so this is just an example of a setup just to kind of give you guys like a visualization of how it should be and kind of take it from there, right? Now, another thing, last thing was R multiple. I want to talk about this and I'll go over a few more things with you guys from there, right? So R multiple is a very important metric that I think you guys should implement into your trading. So what is R multiple for people that don't understand? It basically assesses your risk. So R multiple is in 1, 2, 3. It can be 1.2. It can be 2.4. It can be basically any number. It can be 10. It can be -5. It can be -1, anything, right? So R multiple just basically shows you what your risk amount on a particular trade was, right? So just last thing, guys. So if you guys are a little bit tired, I know I covered a lot of things. This will be recorded. It will be posted for you guys. So just bear with me for another 5 minutes, right? I just want to get to this. So once again, this I think is one of the most important metrics that every trader should be focused on, right? Because there's two ways trading can be looked at. One is from an R multiple point and one from a dollar point. I can sit here and I can say, well, hey guys, I just made $15,000 on a trade. Okay. Most people will go, wow, you made 15 grand. Phenomenal. No, let's flip that. What did Umar risk on a trade to make 15,000? Now, if I risked $12,000 to make 15 grand, and you guys think about it, does that make the 15 grand trade good? No, right? Now, if I flip this and instead of 15 grand, right, let's say on a 15 grand trade, I risked 3 grand, not 3, let's just say 5 grand. Does it make it good now? Yes, a lot better. Now it means I have a 3R trade. Basically, the way you get to R is you divide your end result by your potential or projected risk. So in this situation, based on my stop loss, my projected risk was 5K. So because it was 5K, I was able to identify a 3R in terms of my risk. So 15 divided by 5, you're getting 3. So now in TradeZella, what we are doing, and for option traders, we're kind of figuring something out. Hopefully in the next couple of weeks, we'll have something for you guys. But you guys can place a stop, right? And if you guys place a stop, you guys can look at your trades from an R multiple point of view. So I remember August was one of the months, and I want to show you guys something really cool, really quick, right? So here's August, right? So let's look at something really, really cool and fascinating. So the month of August, I lost 17 grand, had a red month, right? I lost 17,000. We look at my metrics, disgusting metrics, terrible, okay? Now, this is something amazing I want to show you guys. Now, when I look at my month of August in terms of R multiple, so if you guys do have TradeZella, you click this. If you have your R's clicked in, you can kind of look at everything from an R multiple. If I look at August from an R multiple point of view, right, I had a 2.4 R month. So from a different perspective, when we look at two perspectives, one perspective is I had a green month in terms of R. But when I look at it from dollar value, I have a red month. So I want you guys to pause there for a second, because this is very important, right? From a dollar value, right, I had a red month, right? Let's instead of putting a number, let's just go red or green. And then from an R perspective, I had a green month. Now, once again, I want you guys to understand this. I don't want to just give you answers and, have you guys be lazy and stuff. Let's think about this for a second. Why do you think from our perspective, I was green on a dollar value, I was red? If you guys had to guess, right? So ultimately, if you guys gave it a thought, what this means is if I kept my risk consistent, I would have had a green month. Because my risk was all over the place and not consistent, I ultimately ended up having a red month. So if we go through my trades and we look through the trades and we understand the risk aspect, here's the trades, right? And then let's just look at some of the trades from our multiple perspective, right? Realize our multiple. Let's add that. Let's drag that there. And let's look at the risk. Okay, here. Look at this, right? So I have a 2.5 R, right? But I only risked 500, right? Now, when I go here, I made 0.38 R. I risked a lot, but I didn't really hit a good R. Now, when I have good Rs, right, I'm making 2.6 R, 2.5 R, I'm making twice as much as what I'm risking. So essentially, in simple math, I risked 500. I made about 1267 divided by 510. I'm getting about 2.49, right? R, meaning that's how much I'm making in terms of what I risked. Now, when I keep going, great R multiple, great R multiple, great R multiple, great. Okay, didn't work out in my favor, but it's okay. What could I have done better? You go into the trade, same thing here. Now, look at the trades I was wrong in. -2R, didn't follow my stop. Now, when you see anything above a -1R, by the way, guys, anything above a -1R, and in the month of August, I had 2, that means I lost more than what I had initially kind of laid out for myself. So in this situation, I was projecting to risk 3,000. I lost 6, right? So my R multiple was 2. So when I start looking at this from an R multiple point, even on trades, I was wrong 1R. Look at the big difference. So wrong 1R, wrong about 1R, 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 right? Now look at where I'm wrong 1R. Look how much I lose. 1,700, 1,300, 3,300. And look at the trades where I'm making 2.5R, 2.35R, 2.6R. None of them even more than 2 grand. The highest is 1,600. So this goes to show you, like, going back into my August data, which is very interesting. If I kept my risk consistent, maybe if I lowered this risk or I increased this risk, I would have had a green month, right? And that's why I tell traders, when you guys are taking trades, if if you can start identifying your R multiple, it'll help you to understand what that risk is and what you need to work on. Like I've seen traders where I've worked with some traders in the past where they're great at trades. And if they just kept their size within a consistent median range, they would be green. But what happened with some of these traders is they'll take great trades. The risk on the winning trades are good. The risk on the losing trades are good. But then they'll have 2-3 days or 2-3 trades where the risk becomes absurd and they have massive drawdowns. And those drawdowns are what cause that trader to ultimately just blow their account or lose a ton of money, which causes them to go on tilt. And I tell them, why not just keep your size consistent? And if you did, same goes for me for the month of August. If I kept my size consistent, I could have most likely walked out having a green month, right? Now, for people that are asking how to calculate it for options, there's a way to calculate for options, but ultimately, if you just go in here, you put what your potential stop loss for the option was or for the stock, it will calculate it for stocks. It's a lot easier. For options, it's a little bit more complicated because you have to put your option stop price. And the way to calculate that, I have a video in Zella University. If you go there, it kind of breaks down how to calculate it. But we are trying to work on something where if you put the stock price, it'll calculate your option premium where it would be. Right? We are trying to figure that out and kind of take it from there. So yeah, just to wrap everything up, the 3 things I covered here are data collection, very important to kind of build your metrics, understand your trading, because that's the first step. Second step is metrics that matter. Went over, the top 3 metrics that matter and we should focus on. And then finally, how to scale your trading and what to focus on. We had about 45 minutes, went about 20, 25 minutes over. It's okay, but these are some of the topics that wanted to kind of nail in for the trading community, because I think it's very important for you guys to really just take a step back, especially in these tough market conditions, and just analyze your own trading, analyze what is working, analyze what isn't working. What can you do to be better? What can you do to improve? What are areas in your trading that need to basically, improve, right? And also for people that are on TradeZella, the replay system is out. Another cool thing, if you guys hit replay, you guys can go back in time, play a trade second by second, just get the action, see how it formulated, and just get a good grasp of where you're getting in, how the candles were formulating and things like that. With that being said, if you guys, thank you for watching, guys. Thank you everyone for hopping on. And once again, if you got on late, we will be sending this out and sharing this with you guys. So thank you, and hope you guys have a good trading session tomorrow.